Okay, we're going to start with the daily range using premium discount layout to determine the high time frame turning points. I'm going to go ahead and rebuild the day. I'm going to just review the end of the day and then rebuild it. 1 hour PD arrays is the locations we lay out so that that's the kind of the turning points of the draw points. Show the entry model and the timing, the entry, and the risk. All right, so that's the 1 minute time frame. I'm just going to put this down to the 15-minute time frame so that you can see more. This is the completed view. See the daily range high, daily range low. Yesterday closed as an order block. So what did I do? I came into I didn't mean to do that. So let's get, now that we know that, let's get into the charts here. As you look at this, yesterday was sort of a down day, and we're above it, but that doesn't necessarily mean we're going higher because of the fact that there's range above us, and there's premium arrays there that could hold price down. So I really cared about trying to figure out, using this preparation model, where we might go and try and use that. So here's everything that was on the chart this morning. You've got this big daily fair value gap up here, which I ended up pulling back to like basically there. So it was just out of the way. But I felt that the buy side right here would be taken and that this buy side would be taken. And it turns out both of those hypotheses were correct. Now, as I come into the morning, first of all, let's just go to the daily, and you see that the daily range low is an order block right there, and then the daily range high is a order block right there. Right there's the one you're using. So that's the next thing in line. This is unused, and we're not touching it. So that's the next order block in line in the fair value gap. So then you come down to the 1 hour, and you mark out the premium and discount. And you see that we're opening up really quite a ways down in discount relative to the daily range. Not necessarily discount relative to the previous day. We're actually in premium on the previous day. And it's also Friday, so we're expecting reversion and choppiness. So you can see the PD arrays that I outlined. You had a fair value gap right here, an order block right there, all in discount. That's great. Another one here in discount, and then one's up here. And I marked this one out, but I didn't expect it to be used because it's still in discount. And then these larger ones up here in premium. Now I know there's a lot of markers on there. Let me just take these off of there because they're less relevant now. But that's essentially what we're looking at here, is these order blocks. Okay, so now as you drop down to 15 minutes, which is my very next time frame, the next thing I'm looking for is where are the breakers. And notice, I want you to notice this one thing. I should make this bigger because it's really easy to miss given how small it is. This is the daily order block mean threshold. Look at the respect. So it closed lower, tested it, and then went higher, and then closed higher. So early indication we would be going higher at 9:15. Now we can still come down, right? We can still come down into this, dig into it before we go up. But that was one indication that this actually was premium down here. It was being respected as premium. So as I look at this, what I saw is a 15-minute breaker if we get above this, and then one from yesterday that was still there, all the way back up here. Now, the reason I didn't use this, even though there's an order block there, is because it's in discount. So I'm not using that. I don't expect that discount to hold. I expect it to be gotten to, but I don't expect it to hold. So now that that's all laid out, you've got really what amounts to 2 potential trades, 2 locations you're trying to get to, this buy side here, that buy side there. And then you walk down to the 5 minute. And what do you see? And this is actually quite interesting. At 9:30, we had news at 9:45, by the way, which is important because we had 8:30 news and then 9:45, which is flash PMI. So if you come down here, then if you're expecting that to hold up as the morning breaker once we get above it, the reason you would do that is because it's a high and a low, then a higher high before we take out liquidity. Now it took it out here, but it ran right back lower. So it did that right before the open. So as soon as this crossed above this at the open, then we could have been looking down in this range. We could have been looking down in this range for a long. I didn't though. And then what we're expecting for it to do is work through this buy side and then all the way to that one. Now, again, Friday, choppy. So that means that you put on the size and you scale out at new highs and at premium arrays, and then you try and see if you can get a runner to go all the way to it. That's the right way to manage this. So you go down to 1 minute, you see exactly very interesting, not interesting, but like, predictable turning points. Just go minute by minute. So you get the 9:30 dive all the way down, holds liquidity, maintaining the bias. Nothing is shifted short. So that means all of this action up here is still holding. So when I was saying that this 5-minute breaker, which is denoted by the orange, was valid as soon as we got above it, then you can come down to the 1 minute, which was just below it. And that could have been your entry right there, right at 9:35, meeting the 9:30 bullish breaker in discount on a Friday, running through buy side. See the logic there? Okay, so then that happens. And now you're waiting, since it's going up past 9:35, then you have to wait till 45. What happens at 45? A rush down right back into the regular breaker that we were actually waiting for. Why? Failed to displaced into a breaker just before breaking liquidity. There's the pullback, and then you expect it to run to buy side. And it does. But before it does that, because it's Friday and we expect it to be choppy, every new high created a pullback. High, higher high, pullback. High, higher high, pullback. High, higher high, pullback. That's chop. So you got to be prepared for that. So what did I do? I thought this was going to dive a little bit deeper. It didn't. So I ended up having to take it here. I did take it here. I got an early scale out. I was watching this, expecting this to do exactly what it did. It tapped me and went on. And at that point, I had a meeting at 10 o'clock, so I couldn't do anything with it anyways. But then you see a silver bullet that continues into buy side. How do you break this down? So like, why here and not here, or all the way back down here, or anything like that? Here's why. This is 1 minute, but this is the last swing before we break the New York AM liquidity. Okay, and there's nothing over there. I was just double checking if there was anything over there. Always good to check. Wouldn't have been the reason I would have executed anyways. Then you also have a fair value gap. So you have array, and then you also have these are inverted, and then a fair value gap. So the way you set this up is you say, okay, well, what I care about is my order block, or excuse me, my breaker plus an order block. So we could say that, and then I'm looking at the mid of this. Why? Because this area here is a balanced price range. So you actually have a breaker, you have an inverted fair value gap, and a fair value gap, and a balanced price range. So all of those things combined allow you to take a trade right here as soon as it touches. You can add in a little bit more right there, and then you would set your risk right there, expecting this balanced price range to hold. Now, if it goes further, then you're looking at this one, and that would be your stop right there, just below that wick, and you'd expect that fair value gap to hold. And again, still through the buy side, and it does go there. So if we pan back a little bit and review, what do we see? We see yet again that the daily range low is near and just below midnight. We get a 9:30 test into that, which runs higher. So bias is bullish until we get through buy side. And that's what we did. So another great week, another great day, an example of using our daily range layout to determine high time frame turning points, using our template, the 1 hour PD arrays where there are nested 15-minute breakers, and then we just look for a lower risk one with a 5-minute using the same exact methodology. And then we just wait for time of day. That's it.